Welcome to the virtual class of corporate accounting. In previous 9 lectures, I have discussed different areas of calculation in redemption of redeemable preference. And the previous lecture, that is lecture number 9, was one of the most important lecture because in this particular lecture I have covered different varieties related to issue of bonus shares. Now in the same line, today I would like to discuss one more question, and this question is a replica, that is a similar to the question number 7 that I have discussed in last lecture. If you refer liability side of the balance sheet, you will find that equity share capital is given, face value of the share is rupees 100, paid up amount per share is rupees 80. We have two types of preference shares, 12% RPS and 13% RPS. Amount of general reserve is given as 15 lakhs, profit and loss account at 80,000, securities premium for rupees 60,000, creditors, bills payable and outstanding expenses covered under current liabilities. On asset side, we have land and building, plant and machinery, furniture, investments costing rupees 2 lakhs, stock, bank balance and debtors. In additional information, it is given that we need to redeem both the categories of preference shares at different rates of premium. On 12% RPS, we need to pay 8% premium, and on 13% redeemable preference shares, the company has to pay 10% redemption premium. Naturally, the company is following provisions of Companies Act 2013 as the process of redemption is governed by Companies Act. The company has sold its investment for rupees 1,80,000, and at the end of the process, the company would like to maintain a bank balance of rupees 80,000. For the purpose of managing the closing balance, the company is ready to issue new preference shares of rupees 100 each in adequate number. We need to calculate that number in order to maintain closing balance. After redemption, the company decided to issue one bonus share for every 4 equity shares held, and the company also declared bonus to convert partly paid equity shares into fully paid up. We have discussed same in lecture number 9. In this lecture, again we'll be dealing with this important adjustment. And at the end of the question, it is mentioned that we need to prepare journal entries for the transactions given to us. Let us start our calculation with first and foremost transaction of this chapter, and it is related to sale of investment. As per the information given to us in the balance sheet, the cost price is rupees 2 lakhs, and in additional information related to sale price is also given. It is rupees 1,80,000. So when you compare cost price 2 lakhs and sale price 1,80,000, you will realize an amount of rupees 20,000, and this 20,000 is defined as a loss, as the sale price is less than its cost price. Pass journal entry for this transaction. It's a routine. We have passed these kind of journal entries in earlier all questions. Bank account debited rupees 1,80,000 that we have received by selling our investment. Profit and loss account debited with rupees 20,000, that is amount of loss that we have completed in our calculation over here. And investment account is credited with rupees 2 lakhs as the investment goes out. Then second and most important transaction related to calculation of number of shares, because in our question the examiner has not given numbers of shares for equity and preference. So let us calculate number of equity shares. It's a very simple. Paid up capital divided by amount paid up per share. If you want to check for your reference, you can easily calculate with the help of the question given by examiner. Refer liability side of the balance sheet. Equity share capital is given for rupees 8 lakhs. Face value is rupees 100, but paid up amount is given with these 8 lakhs as rupees 80 per share. So 8 lakhs divided by rupees 80. So number of equity shares are 10,000. Same way calculate 12% RPS. I have given number 1 for my reference, so as it's very easy for me to calculate in order to identify both types of preference shares separately. 3 lakhs rupees given by the examiner as paid up capital, and paid up amount is rupees 75 per share. 3 lakhs divided by 75. So we can conclude that the company has issued 4,012% RPS. Then 13% redeemable preference shares. Paid up amount is 4 lakhs. Face value 10 and paid up value is also 10 because RPS2 is fully paid up. 4 lakhs divided by 10, so 40,000 shares. So from the calculations mentioned over here, we can easily find out number of shares, and this calculation of number of shares will be highly useful to us in order to complete the rest of the calculations. Now, after calculation of number of shares, move forward to the calculation given by the steps. Let us start process of RPS redemption. As you all know, the first and foremost step in RPS redemption is to convert partly paid shares into fully paid up. As per the provisions of Companies Act 2013, company cannot redeem its partly paid shares. Let us refer the data. RPS 1 face value is rupees 100 per share and paid up value of the share is rupees 75. RPS 2, that is a 13% redeemable preference shares. Face value per share is rupees 10 and paid up value of the share is also rupees 10. So when you compare this information, you can come to know that RPS 1 is a partly paid and RPS 2 is fully paid. Now, as per the protocol, to follow the provisions, we need to make a call on RPS 1. How many shares are there? That we better know. 4,000 shares. If you are not clear for these 4,000 number of shares, you can visit the calculations that we have made earlier. From these 4,000 shares, we can easily connect the amount. Face value 100, paid up value 75. So per share outstanding amount is rupees 25. We need to make a call on 4,000 shares. So total amount 4,000 shares multiplied by rupees 25 per share and total amounting to rupees 1 lakh. Now make a call as per the requirement of journal entries. We can pass either one entry or two entries. But right now we are passing both the entries in sequence. First entry, we have made a call. Final call on preferential account debited rupees 1 lakh to 12% RPS capital account or RPS capital 1 account 1 lakh. And in second entry, we have received amount from RPS holders on 12% RPS. With this, our first step comes to an end. Second, we need to calculate amount payable to RPS holders. Let us start calculation with 12% RPS capital. 4,000 shares are there, multiplied by 100 rupees face value. 4,000 multiplied by 100 equals to 4 lakhs. Plus RPS redemption premium as mentioned by the examiner in additional information. It is 8%. So 4 lakhs multiplied by 8% equals to 32,000. 13% RPS capital, or you can say RPS capital to 40,000 shares multiplied by face value of the share rupees 10, total amount 4 lakhs, and 13% RPS capital is redeemable at 10% premium. You can check additional information. It is clearly mentioned. So on 4 lakhs rupees, amount of redemption premium at the rate of 10% is rupees 40,000. 4 lakhs rupees plus 32,000 premium, again 4 lakhs rupees for capital and 42,000 rupees for premium. So total amount redeemable to RPS holders rupees 8,72,000. Now we need to pass a journal entry. 12% RPS capital account debited rupees 4 lakhs. 13% RPS capital account debited rupees 4 lakhs. RPS redemption premium account debited as it indicates loss 72,000 rupees and total amount payable to RPS holders rupees 8,72,000. From this calculation, you can easily identify the figures of RPS capital and RPS redemption premium. Total amount redeemable as RPS capital is rupees 8 lakhs. 4 lakhs rupees for RPS capital 1 and 4 lakhs rupees for RPS capital 2, or you can say 12% RPS and 13% RPS. So rupees 8 lakhs redeemable for capital and 72,000 rupees redeemable for RPS redemption premium. This calculation will be useful to decide the arrangement of the fund in step number 3 and step number 4. Let us move to step number 3. It is all about arrangement of fund for capital part. As we know that we need to redeem rupees 8 lakhs for capital part. Just before a few seconds, I have discussed with you. And for the purpose of collection of these 8 lakhs, we have two different options. First, to raise the fund by fresh issue of the shares, and second option to create CRR from the credit balance of divisible profit. But number of shares issued by the company is not given. So right now we are not able to complete the arrangement of the fund. Arrangement of the fund is based on maintenance of the closing balance as given in additional information. As per additional information, we need to maintain a closing balance of rupees 80,000. It means the calculation of closing bank balance is the most important part of this problem, because number of shares to be issued by the company will be based on maintaining the closing balance. So let us prepare a summary of receipts and payments. Opening balance is given on asset side of the balance sheet. We have received rupees 1,80,000 by selling our investment. We have received rupees 1 lakh as final call on 12% RPS or RPS 1, and as per our calculation in step number 2, we need to pay rupees 8,72,000 to RPS holders. So by taking care of these receipts and payments, and at the end we need to maintain rupees 80,000 as a closing bank balance, we need to decide our number of shares to be issued. So by keeping the figures of receipts and payments and closing bank balance in our mind, we need to prepare a statement, and this statement is highly useful to us in order to decide number of shares issued by the company. Opening balance given as rupees 5 lakhs, add rupees 1,80,000 that we have received by selling our investment, add amount received on final call of RPS rupees 1 lakh, add amount received by issuing new 12% cumulative preference shares at par. But we don't know this figure, and our entire exercise is focused on finding the figure in this question mark. Total amount, obviously we don't know, as we have to calculate the figure of 12% cumulative preference shares issued by the company. But need not to worry, we have figure of amount payable to RPS holders, that is rupees 8,72,000, and we need to maintain a closing bank balance of rupees 80,000. Simply reverse the calculation for the purpose of finding the figures. If you want to pay 8,72,000 to RPS holders, and after payment of 8,72,000, if you would like to maintain 80,000 as a bank balance, you should have rupees 9,52,000 as your receipt. So the figure of 9,52,000 is nothing more than total of these two items. Then we have figure of receipts. So far we have received rupees 7,80,000, 5 lakhs as opening balance, 1,80,000 by selling our investment, and a final call of rupees 1 lakh. In this way, we have received rupees 7,80,000. We need rupees 9,52,000. So naturally, the amount of difference is rupees 1,72,000 to fill this gap. It means we need to collect rupees 1,72,000 by issuing 12% cumulative preference shares. Let us calculate number of shares using amount collected by new issue is rupees 1,72,000. Face value of the share issued by the company 100 rupees. As per additional information, we need to issue our shares at par. At par means at face value. So, amount received by the company per share is rupees 100. If we have issued our securities at premium, then the amount received per share would be different. But right now, shares are issued at par. So we need not to worry for that. Number of 12% cumulative preference shares issued by the company. Total amount required 1,72,000. Amount received per share is rupees 100. So 1,72,000 is given over here and amount received per share is given over here. 1,72,000 divided by 100 is equal to 1,720 preference shares issued by the company. This is one of the important calculation in order to secure full marks in final examination, because the rest of all other adjustments are based on this calculation. Now again come to the chart of arrangement of fund for capital part. Amount required for capital part is rupees 8 lakhs that we have decided earlier. From the previous calculation, we have decided that we are in need of the issue of 1,720 preference shares of rupees 100 each at par. So by issuing new shares, the company has collected rupees 1,72,000. Now, out of rupees 8 lakhs, 1,72,000 rupees collected by the company by issuing cumulative preference shares. As you all know, these 8 lakhs is a combination of these two items, that is a fresh issue and amount transferred to CRR. So out of 8 lakhs, 1,72,000 collected by the company through new issue. So remaining rupees 6,28,000 collected by the company using its internal source, that is a credit balance of divisible profit. And the amount of rupees 6,28,000 is transferred to CRR from the balance of general reserve account. You can check liability side of the balance sheet. Amount of general reserve is enough to meet our requirements. Now, past journal entries for both these transactions one by one. Issue of new shares. Bank account debited rupees 1,72,000 to 12% preferential capital account 1,72,000. For your reference, I have also mentioned narration of the transaction. Then we have transferred rupees 6,28,000 to CRR, Capital Redemption Reserve. General reserve account debited rupees 6,28,000 to CRR account 6,28,000. We have transferred amount from general reserve to CRR. Let us move to step number 4. It is all about adjustment of RPS redemption premium. Check calculation in step number 2, amount payable to RPS holders. Amount payable to RPS holders as a premium is rupees 72,000. Now refer liability side of the balance sheet. Security premium is given for rupees 60,000. We have issued our securities at par, so we don't have any other scope to receive additional amount of premium. So out of 72,000, 60,000 rupees adjusted against the security premium, and we need to adjust rupees 12,000 against profit and loss account. So total amount required 72,000. 60,000 rupees adjusted against security premium and 12,000 rupees from profit and loss account. Journal entry for the transaction. Securities premium account debited rupees 60,000. Profit and loss account debited with rupees 12,000, and RPS redemption premium account credited by rupees 72,000. So in this way, we have adjusted amount of RPS redemption premium against security premium account and profit and loss account, as amount of security premium is not enough. At the end of step number 4, let us move to step number 5. It is a very easy journal entry, and without wasting much time, we need to pay amount to RPS holders that we have calculated in step number 2. 8 lakhs rupees for capital and 72,000 rupees for redemption premium. So total amount payable to RPS holders rupees 8,72,000. Journal entry for the transaction. RPS holders account debited rupees 8,72,000 to bank account 8,72,000, being amount paid to RPS holders. With this, our step number 5 comes to an end. Let us enter into step number 6, one of the most important step for this question. As per information given to us in our question, we have issued our equity shares for rupees 100 each face value and rupees 80 paid up per share. As per the information available to us in additional information, we need to issue bonus in order to convert partly paid equity shares into fully paid up. So face value is 100, paid up amount is 80. So we need to issue bonus for rupees 20 per share. Now check the calculation that we have made over here. Number of equity shares were 10,000. So per share that we have derived from this calculation, face value 100, paid up amount rupees 80. So per share 20, and number of shares that we have completed over here 10,000. Let us calculate the amount of bonus. 10,000 equity shares multiplied by rupees 20 per share. So total amount required for bonus to convert partly paid shares into fully paid rupees 2 lakhs. As I discussed in question number 7, we cannot utilize our CRR account for this purpose. As per the provisions given in Companies Act, we can issue fully paid bonus shares from CRR account. But this is not the process to issue fully paid bonus shares. This is the process to convert partly paid shares into fully paid up. So we cannot utilize our capital redemption reserve account in order to fulfill requirement of rupees 2 lakhs. Yes, we can issue these bonus from our general reserve account because amount of general reserve is sufficient. If amount of general reserve is not enough, you can go for any other reserves available to you, but not CRR. Just keep this thing in your mind. We have declared the bonus from general reserve account. General reserve account debited rupees 2 lakhs to bonus to shareholders account rupees 2 lakhs. Now these shares are partly paid up, so we need to follow the procedure. Make a call. Final call on equity share capital account debited 2 lakhs to equity share capital 2 lakhs. We have made a call. Generally, after making a call, we are in receipt of the amount and bank account is debited. But here, the process is all about conversion of partly paid shares into fully paid up without asking for the money. Means the company has offered bonus. So journal entry, bonus to shareholders account debited rupees 2 lakhs to final call on equity shares account 2 lakhs. Now, for the purpose of your understanding, you can easily understand as a student of commerce that here we have opened account of bonus to shareholders and here it is automatically closed. So the bonus to shareholders account is automatically settled. Final call on equity shares account debited and in third entry final call on equity shares account credited. So this entry is automatically settled, or you can say these accounts are automatically settled. So finally this transaction affects to general reserve account by rupees 2 lakhs and equity share capital by rupees 2 lakhs. But we need to pass all three entries in order to follow the procedure. Now we can move towards next step, that is second part of our bonus issue. It is a routine. In this step, the company has decided to issue bonus shares in the ratio of 4:1, means one bonus equity is issued against 4 equity shares held by the company. So on 10,000 number of equity shares, if you follow the proportion of bonus issue 1/4, the company has to issue 22,500 number of equity shares. Therefore, amount required by the company to issue this bonus 2,500 bonus shares multiplied by face value of the share rupees 100. Total amount required by the company 2,50,000. Now, this bonus issue is related to new issue of bonus shares, or you can say issue of fully paid bonus shares. For this purpose, the Companies Act permit us to utilize amount from CRR. So, capital redemption reserve account debited with rupees 2,50,000 to bonus to shareholders account rupees 2,50,000. And numbers of bonus shares issued by us: bonus to shareholders account 2,50,000, to equity share capital account 2,50,000. Narration is also mentioned for your reference. This is last step in order to conclude our answer. Now, arrange all the journal entries into proper sequence as per requirement. First entry related to sale of the investment at loss. Second entry is all about making final call on RPS capital. Then we have received amount on partly paid RPS. Then amount payable to RPS holders along with premium. Number of new preference shares issued by the company in order to fulfill the requirement. Amount transferred to general reserve account to CRR. Amount of RPS redemption premium written off against the security premium account and profit and loss account. Amount paid to RPS holders. Amount transferred to bonus to shareholders account from general reserve in order to convert partly paid shares into fully paid. Made a final call on equity share capital, and this call is adjusted against bonus to shareholders. Then amount transferred from CRR account to bonus to shareholders for the purpose of issuing fully paid bonus equity shares. And at the end, bonus to shareholders used to issue 2,500 equity shares of ₹100 each as bonus. With this, all important calculation and journal entries comes to an end. Now you can prepare balance sheet for this question at your own, as we have discussed preparation of the balance sheets numbers of time. Thank you. God bless you. Keep learning, keep growing, keep watching next sessions. If you really would love to learn on this platform, kindly like the channel and subscribe. Thank you.